Ladies and gentlemen, I hope you're all doing well. I wanted to bring this to your attention. It's a Redfin article titled Home Sales Fell 4% in March as Buying Costs Shot Up. Okay. It was published on April 15th, 2022 by Tim Ellis. Okay. It goes on to say the hottest March on record ended with early signs of a cool down as more buyers were edged out by soaring mortgage rates, sky-high prices, and few new listings. It was the hottest March ever for the housing market, with homes selling at their fastest pace for more above list price than any other March on record. The median home sales price rose 6.2% in March, the fastest month-over-month gain at this time of the year since 2013, to an all-time high of $412,700. Seasonally adjusted home sales fell 4% as soaring mortgage rates and prices sidelined more buyers whose options were severely limited due to decline in homes being listed. Okay, it goes on to say, although pricey coastal markets began showing early signs of a slowdown in late March, nationwide sales data for the full month reflects the hottest March market on record since homes that sold last month mostly went under contract in February, said Redfin chief economist Daryl Fairweather. We expect the combination of surging mortgage rates and record high home prices to cause more home buyers to drop out of the market. Unfortunately, home owners are turning their back on the market too. Instead of being motivated to list before prices weaken, potential home sellers may be choosing to wait out the impending market cool down. Wow, buyers cannot get a break here. Okay, so going over some of the data, the median sale price was 412,700 700, yeah. Month over month, it was 6.2%. Year over year, 17.3%. So that is wild. We have a 1.1 months of supply, and it's down 0.3%. And year over year, it's down spot one. So it's crazy. But here's what really got me: sold above list price. 54.3% of homes sold above list. So that is not a good sign, guys. Okay, so I wanted to carry on here. So everyone is watching mortgage rates right now. Buyers using traditional financing are worried about being priced out, but all cash buyers are rubbing their hands together thinking that high rates will dry up the competition and they will be able to swoop in and bid opposed, said Redfin Austin real estate agent Chris Lefforge. However, the biggest effect I'm seeing right now has been investors. With prices rising so fast, the return on investment is falling fast. Higher monthly payments are starting to push Austin area investors into other less expensive markets or out of the market altogether. Median sale prices increased from year earlier in all 88 largest metro areas Redfin tracks. The largest price increases were Tampa, Florida, which was 29%, Phoenix, Arizona, 27%, and McAllen, Texas, 27%. So they go on. There's a chart here. I wanted to kind of just go over that. The home prices are up 17% in March. So that was in 2022. That would be year over year. Sorry. And seasonally adjusted home sales in March were down 4% from a month earlier and down 8% from a year earlier. Home sales fell from the prior year in 79 of the 88 largest metro areas Redfin tracks. The biggest sales declines were in Northport, Florida, which was negative 30%, West Palm Beach, Florida, which was negative 24%, and Lake County, Illinois, which was 21%, negative 21%. The largest gains were Fresno, California, which was 6%, Philadelphia, 6%, and Oxnard, California, which is 3%. So this is not looking good for buyers. So I wanted to kind of go over one more thing. So I was going over the Fred information for that they released yesterday, and it says that interest rates are now at 5%. So that is interesting. Now keep in mind they take the information from Freddie Mac. Freddie Mac does an average with points. So I think it's an average of 0.4 that they assume you're paying for 0.4 points. So I don't think that's really accurate considering, if I take $50,000 and I buy down my interest and I get a 3% interest rate, does that mean interest rates are 3%? I don't think so. So I think it's a little bit misleading. The rates are a little higher than 5. I think they're about 5.15, 5.25, something of that line, but don't hold me to it. The data changes regularly. But it does show that we have not had such a peak since November 15th, 2018. And really, if you go back, you'd have to go all the way back to, February 17th, 2011. Now, here's what's the real clincher, and this is why prices are just out of sight. You have inventory at 381,950 homes. That is as of March 2020. I guess it was updated on April 1st. Now, if you look going back to August 2016, I mean, we had 1,549,830 homes in 2016. So that is a huge decrease in inventory. So what we can hope, if we look at the data here, which was released as of was March 17th, is the new privately owned housing unit starts. And as of right now, we have about 1,769,000 homes that are sitting in limbo, getting ready to be built. So hopefully that should cure some of the inventory and should put some downward pressure on prices. But for right now, I just don't see this ending. It's insane. So hopefully with interest rates rising and with newer inventory, which is what we really need, we will see downward pressure in the housing market. I don't know what to expect. What do you think is going to happen? Put your comments below. If you like this video, please subscribe and please like the video. And just to let you know, I am a Florida, Georgia real estate broker, not a financial advisor. And thanks again, and we'll see you in the next video. Okay, bye-bye.